Welcome to Earnings Central. In this video, we'll break down Kingsoft Cloud's fourth quarter fiscal 2024 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q4 was $286.7 million. The company actually reported revenue of $305.7 million, surpassing expectations by 6.6%. This quarterly revenue also marked a significant 26% increase compared to the $242.6 million reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q4 was a loss of 10 cents. The company actually reported a loss of 1 cent per share, exceeding expectations by 9 cents per share. This result also reflects a significant improvement of 16 cents per share compared to the loss of 17 cents per share reported in the same quarter last year. Now let's dive into some additional performance metrics highlighted during the earnings call. The biggest headline here is that Kingsoft Cloud achieved non-GAAP operating profit for the first time in its history, dating all the way back to when the company was founded in 2012. This is a major milestone. After years of losses, they posted a non-GAAP operating profit of 24.4 million renminbi compared to a loss of 187.6 million renminbi in the same quarter last year. That's a 12 percentage point improvement in operating margin year over year. Next, their AI business is absolutely exploding, with AI gross billings up approximately 500% year over year to 474 million renminbi. This isn't just a one-quarter blip either. They've had triple-digit growth in AI for 6 consecutive quarters now. The AI-related business is now contributing 34% of public cloud revenue, which is a significant portion of their overall business. The company's relationship with Xiaomi and Kingsoft is proving to be a major growth driver. Revenue from the Xiaomi ecosystem increased by 78% year-over-year to 493 million renminbi, now accounting for 22% of total revenue. This strategic partnership is clearly paying dividends. Their profitability metrics are also improving dramatically. EBITDA margin reached a record 16.1%, which represents a year-over-year increase of 17.7 percentage points and a sequential increase of 6.3 percentage points from the previous quarter. Management attributed this to their comprehensive efforts to improve revenue quality, optimize business structure, and implement multiple cost reduction measures. Adjusted gross profit showed strong growth as well, up 63% year-over-year to 427.7 million renminbi, with an adjusted gross margin of 19.2%. This demonstrates they're not just growing revenue, but improving the quality of that revenue. Finally, the company maintains a strong cash position with 2.65 billion renminbi in cash and cash equivalents as of December 31st, 2024. Even more impressive, they generated a net operating cash flow of 570.2 million renminbi this quarter, showing they can now fund at least part of their capital expenditures internally. Now, let's shift focus to some of the key insights and takeaways from the earnings call. First and foremost, this marks Kingsoft Cloud's first profitable quarter since the company's inception in 2012. CEO Tao Zhou emphasized this represents a critical turnaround from the company's long-standing history of operating losses. They appear to be firmly on track towards sustainable profitability. Kingsoft Cloud is now leading the industry in growth with a 30% year-over-year increase in total revenue. This outpaces all other listed public internet cloud companies according to management. Public cloud revenue grew by 34% year-over-year, while enterprise cloud revenue grew by 23%, showing balanced growth across their business segments. The AI transformation strategy is clearly working, with AI now representing 34% of public cloud revenue. Management highlighted that they're seeing breakthroughs in customer acquisition, including large language model customers and expansion in AI applications for internet companies. They specifically mentioned the positive impact of DeepSeek's large language model on the broader Chinese AI market. A massive opportunity lies ahead with the recently approved Xiaomi and Kingsoft revenue agreement. In December 2024, shareholders approved a significantly increased revenue contribution from Xiaomi and Kingsoft from 2025 to 2027, totaling 11.3 billion renminbi. This represents approximately 10 times the amount from 2023, providing solid support for future growth. The company also outlined their data center investment strategy, which combines OpEx and CapEx elements. CFO Hai Jian, he explained they're following an asset-light model for data centers, partnering with telecom companies rather than building their own facilities. They've spent about 8 to 10 billion RMB on AI investments over the past 4 quarters and indicated that 10 billion renminbi in total AI investment for 2025 is just a start. They've arranged leasing and off-balance sheet financing with shareholders to support this growth. Finally, management appears focused on AI inference as a major growth driver, particularly within the Xiaomi ecosystem. They noted that all products across the Xiaomi ecosystem, including smartphones, IoT devices, and electric vehicles, will be supported by AI and large language models. Additionally, Kingsoft Office's WPS AI user base continues to grow strongly. Looking ahead, management expects accelerated revenue growth in 2025 and expects to deliver positive non-GAAP operating profit for the full year. They're projecting margin improvements across gross margin, EBITDA margin, and operating profit margin, with EBITDA and operating margins expected to improve faster than gross margin. That wraps up our recap of Kingsoft Cloud's fourth quarter fiscal 2024 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.